All right, Adam Jackson. I'm super excited to have you on. You and I think we met a few years ago through some mutual friend. I was looking on LinkedIn. We have 150 mutual friends, which is pretty high. But I think you and I have some overlaps with having started companies in healthcare and now in crypto. Can you just give a little background as to the highlights of the things you've been working on?
Yeah, for sure. Well, great to see you, Mike. Thanks for having me on. So my quick background, I'm a software engineer by training, studied computer science at Vanderbilt University, moved out to San Francisco right out of school. That was quite a while ago. Been out here since 2003. So I'm an old man out here. But I'm sort of an engineer turned entrepreneur. Braintrust, my current project, is my fourth venture-backed company. All marketplaces, all in different categories. First one was an e-commerce company acquired by Intuit. Second one was an automotive marketplace acquired by Advanced Auto Parts. Third one is called Doctor on Demand, which is a large video telemedicine company. And then now Braintrust, which I've been working on for about 3 years.
Yeah, I love it. A marketplace founder. How do you think about the similarities between the different companies? I mean, when you jump into a project, say from a first spark of inspiration, what do you lay down? Do you think that has parallels across each project?
Yeah, I mean, they're all tech-enabled marketplaces. So Braintrust is a global talent marketplace that connects technical talent, product managers, designers, programmers with big companies that have insatiable demand for them, like Nestle, Porsche, Goldman Sachs. What they all have in common is like it's using software to bring demand and supply together. And they're very hard businesses to start because you have two different customers you're trying to serve at the same time, supply and demand. And so you got to get to product market fit for both of them, and then got to get them to transact. And so they're really tough businesses to build, but once you build them, they're incredibly valuable and powerful. And the goal with this one is to get the network effects going so strongly early on with the talent, the supply side, majority owners of the network. So you keep those incentives aligned between the people who make their living on the marketplace and the people who own and operate the marketplace. And so that's been probably my common theme.
Do you work with the same team across the businesses, or is it
A lot of
fresh
overlap.
team?
Yeah, a lot of overlap. I've had amazing teams at all four companies, and every chance I get, we'll bring people along to keep going.
So what was the spark? I imagine it was a frustration from Doctor on Demand or past business with Braintrust and realizing there's a problem in the, what would you call it? Not recruiting, but the connecting space of figuring out where you want to go and start working at a new company.
Yeah, I'll tell you what sparked it is. So having built 3 marketplaces, web-enabled marketplaces as a co-founder, and then invested in almost 100 more, I got to see like there's one dirty little secret about web-enabled marketplaces that people don't talk about, but it at scale can be very corrosive, is this misalignment of incentives between the people who make their living on the marketplace and the folks who own and operate it. And the way that starts, if you rewind, like how do you get a web-enabled marketplace to scale? Well, the typical playbook is you go raise hundreds of millions or billions of dollars in venture capital. You use that money to subsidize one or both sides of the marketplace to gain market share quickly. You get users, you're connecting supply and demand. And then if you're lucky, most companies die well into this phase. But if you're lucky enough to break orbit and get liquidity in your marketplace, it's time to start paying those investors back. And rightfully so, right? They're risk-on investors. They deserve a return on their capital. But where does that return come from? Well, it's going to come from transaction fees on the marketplace. So some percentage of all those transactions needs to be extracted from the network and then returned to shareholders, right? That's the typical investor-owned network. And so what happens when that third phase kicks in is incentives start to diverge between the people who make their living on the network. So that might be like drivers for Uber, dashers on DoorDash, whatever, restaurants on Yelp, and the folks who own the marketplace, which are typically venture capitalists. And so I thought, look, and when that happens, when those incentives diverge, it gets ugly, right? You're seeing this play out in the gig economy right now. You saw it play out with Uber, where so many of the drivers who depend on them to make a living are at or below poverty line. And so I thought, when I got out of sort of day to day operations at Doctor On Demand, and which by the way that's not why I left there. That just turned into a giant enterprise healthcare company. We need a real manager to take over. So that's why I stepped out of day to day. I'm
Yeah.
much more of a 0 to 1 guy. But I started thinking, there's got to be a better way to grow these marketplaces in a way that keeps incentives aligned instead of having half your users hate the operator. And so this is where we came up with this kind of idea of a user-owned economy. So it's the big idea here is we think user-owned marketplaces will grow faster and become more valuable than investor-owned marketplaces. And the way to do that is to give folks ownership and control over the network early and often in proportion to the contribution they're making. And so that's what we're doing with Braintrust. It's a whole new ownership model. And it's, interestingly, it's one that's uniquely enabled by a blockchain token. So, I always use this example, like, what if Travis and team at Uber could have given ownership and control of the Uber network to drivers early on, and then to more riders and more drivers as they spread the word and recruited more people to the network, opened up new cities, maintained 5-star reputation. Like, instead of having to hire tens of thousands of people, they could have had the network kind of grow itself, right? Well, to be fair, like, there were no tokens back then, and you just can't give shares of a Delaware CCorp to 10 million people in 40 countries. It's like logistically and legally impossible. But you can do that with a token. Tokens are as easy as sending an email or an instant message. That's how easy it is to transmit it. And so that's how, this is Braintrust, kind of the user-owned economy it's a new business model enabled by a new technology. That's the new piece.
Do you see it as a blend? I mean, do you see, because initially the venture capital will be used for paying people's salaries to do work, acquiring demand, supply, spending on marketing. How it seems a little bit like, unless you can raise enough money from the people who are buying into the initial token, that there's still a money gap there. Like, does that make sense?
For sure, yeah. The role of investors doesn't go away, right? Like, you still need startup capital. We've raised about 25 million over 2 rounds, a seed round and a growth round, and that's all we'll raise. So 25 million. I mean, it's a lot of money, but like, for building a web enabled marketplace is actually nothing, right? That's a minuscule amount of money, and so we've got the network to sustainable based on that small amount of initial capital. So there's still a place for investors, but the network, when we publicly launch Braintrust later this year, will be majority controlled by its users.
So tell me where things are today. So you said when you publicly launch later this year, what is the team size or back end product, or how much have you guys tested things?
Yeah, for sure. So we've been at this. I wrote the token economic paper for this back in May of 2018. So it was 3 years ago. We raised a seed round for it in November of 2018, which was no fun. That was, if you remember, the crypto winter back in 18, when the space, if you think it's funny now because of Dogecoin, it was really bad in 2018.
Yeah.
And so we raised that. We spent 2019 building out the platform. 2020, we got into public or private beta rather. March of 2020, COVID hit. All these businesses, were sort of forced to become remote companies overnight because they were all locked out of their offices. And that was really an inflection point for this model. We're a global distributed talent network. All these Fortune 1000s were like, shoot, we need remote engineering and design teams. And, that's what we do. So the COVID lockdown ended up being a lucky break for this business model. And so we raised a strategic funding round in October of 2020, a bunch of great investors, both traditional venture and token-focused hedge funds, things like that. Pantera, Multicoin, Blockchain, Acme VC kind of came in and led that round, about 20 million. And now we're growing like crazy. We've grown about 40% month over month for marketplace revenue. We had our first $1 million month in February, so we're just like really ramping fast here. And we'll publicly launch the network and the token later this year.
Wow. So the people using it now are through private requests from companies, and then I imagine on the worker side, how can you not be public and have $1 million a month in revenue?
Yeah, so public means anybody can join, right? So right now it's still invite only, believe it or not. And so the majority of talent joining are from talent and community referrals. The majority of the clients come on also from referrals. We pay folks in token for those referrals, the Braintrust token. And so that token's not live yet. To your point, it's still a testnet token. Later this year, when the token and network launch, it'll become an Ethereum mainnet token.
Mm.
You asked about team size too. This is an important one. So we have a really small core team. It's less than 20 people. Almost all the work that goes into building this, now multi-million-dollar, really fast-growing marketplace are the users, right? The users that are recruiting talent, vetting talent, recruiting clients, onboarding clients, doing marketing work, helping build the brand out. We don't have any core team engineers. All of our engineering are done by members of the community. And so it's really like we started out as a community run project from day one.
Wow. So is it set up as a Delaware C Corp?
So there are actually many Delaware C Corps contributing to the network, but the protocol itself, it's
Yeah.
a protocol on Ethereum, right? It's like
Yeah.
Bitcoin isn't a company, right? It's a
Yeah.
blockchain.
Yeah.
Ethereum, there's no company there. Now there's consensus, there's Ethereum Foundation, there's, hundreds of
Hmm.
companies that benefit from Ethereum's existence, but Ethereum itself is basically a public good, right? And so Braintrust is the same thing. Braintrust is built on Ethereum, but it's a nonprofit. It is not meant to extract fees or benefit anyone. The token is not a profit return mechanism. The token's used for governance. It's used for bid staking. It's used for controlling the product roadmap, and the token is designed to help folks who make their living on Braintrust, who are very much for profit. They're individual programmers or agencies, very much for profit entities. Braintrust, because it's controlled by its users, can drop its fees. So we have a 0% platform fee to talent and a 10% fee we charge clients, and that's just to keep the lights on, right? It's just it's a self-sustaining thing. So you can think of Braintrust like a protocol for work. It's a public good, and everyone that benefits on it, is very much a for-profit. So there's many Delaware Cs and other global corporations that are helping build Braintrust because they're benefiting, they're growing their business because of Braintrust.
Yeah. Interesting. So when you raised from like Multicoin and Pantera, those folks, would they have bought the token directly, or they would have acquired shares of any
Yeah, so there's
entity?
no shares. None of the Delaware Cs are selling shares. Those are all little private companies that are just talent agencies, basically, not venture style businesses. So the early investors in this project are, they bought tokens or a SAFT, which is something that converts into a token.
And that's how you position it as well. So you own presumably a significant amount of tokens on the network, and you're working to increase the value of the token.
No,
That's how
I
you think about it?
own I own less tokens than you'd think.
Why?
My co-founder and I have probably 15% of the tokens combined. The
Uh-huh.
major, and then another 15 or 18% go to investors, and then the rest, so 60 something percent, are given out to the community. And the reason I'm doing it, there's a few reasons personally. One, like,
Hmm.
I have a freelance development shop that makes money as a talent source on Braintrust. So I've actually always had it since college.
Nice.
And so, like, I'm a user just like everybody else. I happen to be one of the founding users of Braintrust. But then, like, it's also a passion project for me, right? It's like, I really think that marketplace operators or talent agencies that, take talent from developing parts of the world, mark them up 3x, and then overcharge clients like Nike or
Yeah.
Deloitte or Goldman
Yeah.
Sachs. Like, they take all the value in that transaction, right? And I just think
Yeah.
I think it's shitty. I think it's unfair to the talent. I think it's a ripoff for the client. And so I'm passionate about building this Braintrust as a protocol for work, right? Just like
Yeah.
Ethereum is a protocol for smart contracts and Bitcoin is a protocol for store of value. Braintrust is a protocol for work. We connect folks who are information workers who can do work from a computer with folks who need them, like big companies.
Hmm.
and
Hmm.
then you get out of the way, right? And
Yeah.
you take all that value that used to be extracted by the middleman, by the big consulting firms or the Upworks of the world, and you give that value back to the people who make their living on the network.
Yeah. I love it. The similarities are just super interesting. So yeah, I also started in healthcare with a marketplace called Home Hero. We raised 23 million in venture, sold the company, and then I started a crypto business called Redeem in 2018, where we allowed people to on ramp into crypto using non fiat, like gift cards or vouchers, airline, that sort of thing. And the whole time, I have also a talent agency, like a staff augmentation company called Otter. And I always think about, like, we basically focus on helping remote companies hire developers, specifically in Argentina and South America.
Yeah.
So it's like a very targeted model. But this whole time I'm thinking, what's the introduction of blockchain into the whole placement? Or I think of it as a few different problems, or a few different ways it could change. One is the actual connection. So, meeting a person directly is, it has to happen somehow, and usually it involves a bit of work, either through referral or luck. And so I see the value in agencies that have a big network, and they can put out the network, screen people, and then there's the screening of the person themselves, determining who is a good fit for this role specifically. And the more nuanced and senior the job, the more screening generally goes along with that.
Yeah.
And yeah, and so I think, like, it does make sense to have. How do you think about the screening portion of it on the network? Is that done by screeners or validators?
Yeah, I mean, as you know, like screening is really important, right? Because if we're placing enterprise grade talent into
Mm,
enterprises that need them, and so this isn't like, hey, design me a logo and a WordPress site for $50, the kind of stuff you'd see on Upwork or Fiverr. This is like, hey, we're building software for banks and car companies and insurance companies, and it's heavy stuff. So screening for quality is extremely important. So the first like 100 or so people, myself and the core team screened ourselves, and then, the next 1,000 were like invited and screened by the community. And now, the majority of talent coming in are screened by our community. And that's one of the ways you earn tokens on our network, is by
mm.
helping screen talent.
How does that logistically work? Like, would I schedule a Zoom call with someone and then give them a rating
Yeah,
to
there's
screen them?
we blend, you sort of blend asynchronous and synchronous screening all together. So you want folks that can like, prove their skill competency, maybe asynchronously, but then also like, prove that they are who they are, say they are when they're, on a live video call. And so it's a combination of things.
Hmm. So that, from a technical perspective, would there be tests like
Yeah.
I guess, is it, yeah, so there's custom in-house, like, coding tests or
Yeah.
marketing
We
tests
built
that
all
you
that stuff
guys.
ourselves.
Oh, awesome.
Yeah.
Awesome. Got it. That makes sense. What is the most challenging part of it? If so far everything seems, you're like calm and cool, and this seems like a hugely fast-growing business. Yeah, what do you think
Well,
about?
well, Mike, I mean, you've built businesses. Like, it's all hard, right?
Yeah,
Everything's hard.
yeah,
It's just like, do you feel like it's going to kill you that day or not? It's sort of,
yeah.
it's like,
Yeah, yeah.
it's all hard. I'll tell you, like, we when you build a marketplace, is, you've got to, you sort of, you got to pick one side to overbuild, and then lure the other side in, supply or demand, right? So like Uber started with a bunch of black cars, and then they would lease out some taxi time, and then they would backfill with demand, right? So they started supply. Doctor on Demand was the same thing. We started with more doctors and then layered in the patients, and then you sort of try to keep them tight, right? And so we started with more supply. We loaded up the network with hundreds of developers and product managers and designers, and then spent, most of 2020 like, layering demand in, and, matching with supply. And we always had a little more supply than demand. And then COVID inverted all of that for us. And so we now have far more demand than we can keep up with. We have enterprise companies like banks and insurance companies and car companies coming in and saying like, we'll take all of it. Like, we'll take everybody. And so we are, paying more generous bonuses now for referring qualified talent and helping vet them. You can earn, quite a lot of tokens. We also do cash offers. Use braintrust.com/hire. It would be the landing page to go to. I have to plug if you're talent
Yeah.
looking to come in. But like, yeah, um, it's amazing because most agencies and most talent marketplaces are usually demand constrained, right? I mean, you always hear, like, if you listen to Upwork or Fiverr's earning calls, it's always about attracting more clients. And we have the inverse condition here right now. So, and I'm sure that'll flip back at some point. But yeah, really scrambling to bring on enough talent to fill these amazing, very well paying roles.
Are most of them technical, like software engineering, or would you say from enterprise? It seems like you're targeting enterprise specifically. Are they?
Yeah,
I mean,
it's
yeah,
a lot of engineers, a lot of design, UX, product managers. It's all the above.
yeah. Interesting, interesting. What other outside of taking a step back from the network specifically at Braintrust? What other projects are you involved in? You mentioned this is a passion project. Do you have other active projects, investments that you spend time in?
Not really. This is like, this is
Yeah.
really my day-to-day role. I mean, I'm an active, semi-active investor in this space as well. I helped co-found a hedge fund called Cambrian Asset Management, which is a digital asset management company. Myself and two friends started in 2017. Braintrust actually incubated out of the fund. And so I'm no longer a GP there, but we'll help out there whenever I can. And then I'm an angel in many, many, many different projects, and so helping support the IDEO CoLab team right now on something they're doing called Syndicate, which is moving a lot of venture capital onto the blockchain. So also very, very passionate about that space.
Where do you think that goes? I've been thinking about that recently. How do you think blockchain affects venture capital?
Yeah, so I think it makes an already very competitive business, venture capital, even more competitive, and that's a good thing for founders and for, I think, the general progress of society. It reduces sort of the gatekeeping that venture firms have traditionally served as for capital to early stage founders. Um, so I think, these tokenized communities, these user-owned communities, things like Braintrust, and you see many, many projects in the DeFi space. They will raise funds and then have this sort of large treasury. I mean, if you look at projects like Filecoin or Uniswap or Compound, they end up generating these large treasuries. And one of the novel ideas I see our friends at IDEO, so Ian Lee and others exploring, are this concept of allowing, splitting up those treasuries and allowing the community to really directly control how a lot of those funds are deployed for the betterment and the advance of the network, right? So imagine, like, imagine you're a venture backed company, you raise $100 million, just the old fashioned way, and by selling stock, and then you divide that up into, like, you take half of it and do 10 $5 million buckets, and then you have like 10 segments of your customer base decide how it gets used. Right? Like, what
Huh.
an interesting way to think about product and network development, right? It's like, because community mostly are your customers at the end of the day, right? And so that's certainly the case for Braintrust. And so IDEO and these guys are thinking about ways to have, community, who are the folks that directly care the most and benefit from the protocol, decide how the protocol should advance. Even so far as by using their tokens to vote on how funds are distributed. So Braintrust is moving in this direction, but I think that's an interesting way to deploy capital, and thus an interesting way to raise capital too, right?
Mm.
So I think all of that sort of puts additional pressure on the venture industry, who are supposed to add value, right? They're supposed to deliver capital and add value and join the board and all this stuff. And that old model of venture, I think, is just being, chipped away at
Yeah.
through these
It,
new.
it yeah, and it doesn't I mean, in my experience, we had great members on the board, but they're in no way it's hard to segment out what's the value of a board member or an investor versus what's the value of the capital. I mean, my gut guess on that would be 95% 98% of the money invested typically is the value of the capital. If you wanted to hire a person on to be a founder coach or an advisor, strategic advisor, you can just pay a person to do that or give them equity. I don't see any intrinsic need for the capital to be wrapped in with the advisory services of the investor. It seems
Totally
like you
agree.
could completely segment that and there'd be no issue. So I mean, and I've helped a couple of founders raise money and think through it, and it just doesn't. It's really tough for people investors specifically, to justify the value after the investment. Uh, so yeah, I think that makes a lot of sense. On the deployment, though, I want to dig into that for a second, just as a thought exercise. So imagine there's a couple of companies that run as co-ops, like REI, I know is one, and they're it's still not, there's still a person as a CEO that's going to make executive decisions, an executive team and a board. And then the profits are shared with the employees of the co-op members. But can you run a company as a democracy successfully? I mean, say you have two equally, just put on this example for a second, two equally sized companies, equal talent, equal funding. One is controlled by an executive team with a board and a CEO. The other, the important strategic decisions are made by voting. So everyone in the company gets one vote, they all vote, and then they decide which direction to go. I mean, is it obvious which company wins, or what's your
Well, in that example, it is obvious centrally controlled wins. But
right?
I would propose a third option where you actually have, instead of a centrally controlled person or entity kind of reaping all the profits and extracting all the value, and then taking their cut, salaries, bonuses, and then distributing the rest to shareholders. I would say, like, what if everyone is working on a protocol which doesn't make any money, right? The protocol just facilitates the marketplace, and then lots of different centrally controlled for-profit entities can compete for dominance or influence over that protocol, right? So it's almost like you know you see this in Ethereum, where it's like, hey, how should we decide the future of Ethereum? Should the miners get more fees, or should the holders get more fees, or should we do this or do that, or what performance should it have? And like, there's all these for-profit entities, like the DeFi projects, that have a stake in this stuff, right? So it's like hyper capitalism, if you think about it that way, right?
Mm.
So you have all these projects that take the public good of Ethereum, or the public good of Braintrust, build their for-profit business on it, accrue tokens along the way, right? Because that's how the protocol works. Those tokens represent control, and then they get to decide and debate on what the future of the protocol looks like. So that's sort of the new hybrid way we're seeing things work in blockchain.
Do you feel like the difference between that and a company conceptually would be that if say Adam completely disagrees with the management of the token on the blockchain, you can just fork it, make your own, and invite people to your new party. With a company, you can't really. I mean, I guess if you have all open source code, I mean, you can't really. It's not the same, right? Because you have customer accounts, you have some proprietary information in the company, presumably. Do you see those as close parallels, or is it like quite a bit different, with the idea that a company can't just be reproduced and forked the way a blockchain can?
Yeah, and look, blockchains can't always be easily forked either, right? I mean, you can fork software, but you can't fork people, right? So community
Yeah,
matters.
yeah.
Liquidity, like where people go and what they do. Like
That's a
Braintrust,
good line, by the way.
you can fork
You
code,
should
not
tweet that
people.
one out. You can fork.
I like that. That's a good one. Yeah, I mean, it's true though, right? So it's like with Braintrust, like when we launch, we'll open source the software, so anyone can create a copy of Braintrust and do whatever they want with it. They're not going to bring Nike, Porsche, Goldman with them, right? Like, those people already have relationships with the
Mm.
talent they found on the current Braintrust marketplace. It's the same way as like the Ethereum chain today has nothing to do with Ethereum Classic, even though a mere 3 years ago they were the same chain. Right now, nobody uses Ethereum Classic. So software, like, that's the thing, is like, when when these web-enabled marketplaces started 10 years ago, software was hard, right? Like building, Uber's innovation was
Hmm.
using a smartphone to connect supply and demand. Now, like me and you could get a case of Red Bull and in a weekend rebuild Uber from scratch technologically, right? It's not the software that makes these marketplaces valuable. It's the people and the identity and the relationships. And so that's what a real marketplace is. So then if you take that fact and say like, okay, well, if it's the people that are valuable, not the software, why are software enabled marketplaces taking disproportionate fees? Why can Upwork charge 25, 35%? Why is Fiverr taking 50% when they're just software at the end of the day, right? So this is like, we're moving down this track of like just connecting supply and demand doesn't deserve a 50% fee.
So do you look at every marketplace out there, every web-enabled software marketplace, and say, if there's investors that own the company and there's transaction fees, then play it out long enough, and blockchain is going to come in and offer a better alternative for the people who use the product?
100%, dude. That's exactly the
Yeah,
conclusion to come to. Like, like I think about Braintrust is not doing this, but
got
like,
it.
like think about last mile marketplaces, people who deliver other people or food, giant industry, right? DoorDash, Postmates, Uber Eats, Lyft, blah, blah, blah. Like those are highly extractionary companies taking transaction fees, usually from the restaurants and or drivers, and not providing value commensurate with the fee extraction. Right? There's some value being provided, obviously, but it's
Hmm.
not commensurate with the extraction. So someday someone will come along and say, "Look, we're going to be a driver-owned network, right? And like forget
Mm.
the corporate middleman. We're going to build a tokenized network, and the way you get more tokens is you invite more drivers and maintain a good reputation, and these networks will tokenize, and it won't be the publicly traded companies that do it to themselves, right? This is disruption through absolute starting over, right? And so, yeah, I think this brain trust model, I'm convinced will be a blueprint for how other web-enabled marketplaces will get reimagined to be user-owned.
God, my mind is exploding. I mean, when you really process that, the number of marketplaces that exist and the amount of capital that's gone into them and the amount of just total market share they own is insane. I mean, it's been I think it's got to have been the number one most interesting venture, call it segment or focus. Um, yeah, how does that not happen? All right, let me ask you this question. What do you think about the distribution of wealth? Does this increase, decrease, or unknown for wealth inequality between people who are providing services on the marketplace versus investing in them? I mean, obviously, we feel pretty consolidated because capital is owned by venture capital. So it would seem like this moves the other way, where people on the network own a bigger percentage of the network itself, and then there's less
100%.
consolidation.
Absolutely. I mean, this is like you're just hitting these points. Like it's like reading our investor deck almost. Except we didn't put in the societal fairness piece because VCs usually don't care about that. But like if you think about what we have today is the wealth inequality problem was only. I always say the gig economy's real innovation was figuring out how to fuck over labor in ways that prior generations could never do. That was their only real innovation, right? Was figuring out how to effective. Like I'm quoting a Georgetown article from 2017 or 18, where they did a study on Uber drivers and other gig economy drivers, and like figured out what their effective minimum wage was. Like after you deduct the
Mm.
gas they have to pay for and all this stuff, and like they're at like $5 an hour effective. The effective national minimum wage used to be like 12 something. The gig economy brought it down to 5 something dollars per hour. That was and then like they don't unionize, they don't get benefits. Like so, like the gig economy really was an economic disaster for labor, and and people are. It's reasonable to be angry with tech at for that, right? And that's a reasonable criticism. And my opinion has always been, look, tech created this problem. Tech should solve it. And so that's where we come from at Brain Trust is let's, instead of having a for-profit corporation in the middle that its only job is to extract as many fees as possible from every delivery or every connection made, let's make that open source. Let's make it owned and controlled by its users. Bring that rake as close to zero as possible. and take that old rake that was being extracted before and just give it back. Give it back to the users.
Mm,
Give it back to the folks who make their living on the network. So prices don't have to go up for the demand
mm,
side, but more the value goes back to the folks providing the service. And
yeah.
you get rid of the middleman. So if software ate, or if software is eating the world, blockchain's eating the middleman, right? That's what we.
Yeah.
I think
Yeah.
I
Yeah.
think
That's
most
a great way to
people
think
get that.
about it.
Yeah.
Yeah.
And
Yeah. Because
so yeah, that in and of itself, like that's a market driven solution that happens to help dramatically, I think, fix the income inequality problem. Right. I don't really
mm,
like, I don't see wealth inequality as a huge problem. Like wealthy people should be as wealthy as they want, as long as they're not breaking the law. Income inequality, though, it's a big problem. And
mm.
so I think this helps close that gap dramatically.
That's so fascinating. It's really, yeah, blockchain eating the margin, eating the take.
Even the
So the
middleman, yeah.
initial people, so you built, say, like, let's spin up another product. Say there's a Airbnb for marketplace, blockchain based Airbnb. The initial people on there that are going to host the buildings, have the homes for rent. Those people are going to be incentivized because they want to own a piece of. Say they look at it initially. Tell me if you agree with this, that the initial people on the supply side of a marketplace, blockchain based marketplace, would be using it for the value of the transaction, but also, and maybe even more so, for the value of the increase in the token. So they're saying, I want to be an early user in this token because I want to grow my wealth on the token. Whereas people late stage on the marketplace, they're just using it because it's a low transaction fee. It's just the best marketplace. Is that?
Yeah, I mean, look, that's one way to look at it. Certainly, and obviously, people speculate on the prices of tokens, right? That is not the business we're in. We have made a token economy where the token is the only way to participate in the economy, and the more you
Mm,
participate, the more you can grow your business, right? So, like,
mm,
our token has no cash value today, and whether it does or not in the future is out of our control. But it's designed to not matter, right? And so
mm,
you can't. I really don't believe in creating a tokenized network just so like the early people can get rich. It's just that
mm,
that's antithetical to what we're doing. What we want to do is create a tokenized network where the flywheel of the marketplace spins because people are earning tokens which represent control, governance, right? And so in your example, the early people who are supplying real estate on the tokenized Airbnb, they want to accrue tokens because those tokens will represent how the network grows, what the rules are, instead of just Chesky and crew deciding what the rules
mm.
are, right? I happen to think Chesky does a good job. I don't like to pick
Yeah.
on Airbnb because they're one of the few marketplaces, web enabled marketplaces, that I think actually provides as much value as they extract, right? Like I don't think those guys ever get disrupted. I think Uber gets disrupted all day long. The food companies, those guys are dead meat once this tokenized thing really gets foothold. But Airbnb is a complex business. You've got insurance on the
Yeah.
rentals, reputation management, dispute resolution, blah, blah. But let's pretend they weren't doing a good job. So as a homeowner, apartment owner, I want to vote. I want to say over how this thing goes, and it's not just the corporation arbitrarily deciding the fate of my rental business, right? So you do it for reducing the fees you pay and exerting control. Those are the hallmarks of a good tokenized network. It shouldn't be done so like early people can make a lot of money.
Mm. Do you pick on, say, Uber or the food delivery apps because they charge too much, or is it just a fundamental part of their business model that's flawed?
Look, I think a marketplace operator should not extract more value than it provides. And if it does, it's leaving itself vulnerable for disruption. So let's look at a Postmates, right? Like Postmates will charge the restaurant something, then they'll take a fee from the driver, and the only happy party there is the consumer, the person ordering the food, right? And so if like the restaurants will like beg their customers to not order through Postmates because they're
Mm,
losing money on a unit economic basis. Look, your business is fucked if that's a problem, right? If one or more sides of your network would do anything to get rid of you,
Yeah.
you're going to get killed, right?
Yeah.
Someone smarter than you will figure out a better way, and that's the beauty of capitalism, right? Market-driven
Yeah.
solutions. And so, user-owned networks are the market-driven solution for overly extractionary marketplace operators, and that's why I say, like, so some of these are more susceptible than others, right? I think Yelp got what got, like, I mean, Google ended up dismantling them, but somebody else would have
Mm,
eventually because they were extracting from those businesses. Um,
mm,
the food delivery guys, I think, are highly extractionary for what they're doing. Airbnb, not so much. Like I just said,
mm,
I think those guys have a good long term business because they provide so much value.
Yeah, it's almost like the more complex and like there's some value in having a consolidated effort on local regulations or lobbying and taxation, maybe. Yeah. Yeah. It's almost the more straightforward transactional businesses, in your case, Fiverr, Upwork, which is going to be interesting to see how that plays out. Because I'm sure once people learn about and start using Braintrust, there's almost a point of no return where they can't, it's like the elephant can dance. Are you familiar with that idea? The incumbents in the space just, what do you do? What do you do if you're Fiverr, uh, say, or if you're running Upwork, you're the CEO of Upwork. 5 years from now, Braintrust is growing. You see the writing on the wall. You listen to this podcast. I mean, do you just see these companies riding into the night like Blockbuster style, or do you think they just need to make a hard pivot into
Well,
tokenizing?
two responses. First, you can't hard pivot into dropping your fees by 80%, right? Your stock will go to
Mm-hmm.
zero. You're done, right? That's like just solving the problem by blowing yourself up. So they're not going to do that. I also don't think, like, I'm not a zero sum thinker by any measure. Like,
Mm,
these markets where information workers are leaving full time roles, becoming freelancers, and they want to do gig work on their own terms for big companies. That market is almost, it's growing so quickly and is so large that it's almost immeasurable. We can't even measure
mm,
the damn thing. It's measured in the trillions of dollars per year, GSV. And so, we're not like, Braintrust isn't here to eat anyone's
yeah.
lunch.
Yeah.
Certainly not Fiverr or Upworks. And so I wouldn't. I think those companies will do just fine, right? Now look,
Yeah.
apples to apples, if you're a developer, a designer, a product manager, you should be on Braintrust instead of Upwork, right? Like, if you're on Upwork, you're just giving your money away for no reason, right? Now, in that said, this world is so big that I'm sure those companies will do just fine, right? And we're
Yeah.
certainly
Or
not.
be at both.
Yeah,
Yeah.
it's all the above, right? And we're not here to eat their lunch. Like, we're creating new markets so when you drop fees, you enable new larger transactions to touch marketplaces that couldn't touch them before,
Mm,
right? So, like, Porsche would have never taken their $100,000 a month job to Upwork and given Upwork 35% of that as a
yeah.
as a fee, right? That's stupid, right? They would have just hired Edelman and
Yeah.
paid even more for it. And so,
Yeah. Yeah.
they come to Braintrust and they're like, look, we know what we're paying, 10%, well worth it. We know who we're getting because these guys are really transparent. And so we're growing the market here.
Mm, yeah, I like it. Although I'd push you to be more, we're gonna take over the world. No, your points are very valid. That makes a lot of sense. It is an unfathomably large market, especially
Well,
when
you could
you
take over
look
the
at the.
world without hurting competitors.
Yeah, it's true. Yeah, you lift them up.
Two can be
Rising
true.
tide. Yeah. It is mind blowing when I think about the number of people who are just coming online in parts of the world like India and Southeast Asia. I forget what the number is, something like millions of, I want to say millions in the people a day. And
New knowledge
yeah,
workers.
it's almost like as a collective human mind hive where, Starlink is providing internet to everyone. We're all connecting and, um, yeah, it is. It's kind of mind blowing to think about the implications of all of it, even in the next few years.
Yeah, look, I think this old model of, like, when you and I got out of school, like, you go work for a consulting firm or you try to get a software gig, and, like, you go work for a corporation and the corporation sort of warehouses talent. That's the old way, right? It's like that's going away. Corporations are unbundling talent, freelance talent across all industries. We're just in tech right now. Think about when this happens to legal and accounting and compliance people, all these other knowledge workers, right? it'll all unbundle, and they'll use networks like Braintrust to find gigs on their own terms, and it's better for talent and it's better for companies, right? Companies don't want giant payrolls; they want to be able to spin up,
Yeah.
spin down flexibly. So it's a real win-win.
Yeah. Yeah. One of the challenge. I interviewed a guy who's the CEO of Deal, and they're trying to make it so you can hire anyone in the world just as easy as you hire someone, say in the U.S. if you're U.S. based. But it's surprisingly difficult. I was talking to a friend of mine who has it's like a 200 person company, and he's like, we can't. My CFO won't let me hire people in South America because the cost to onboard them and the legal risk and everything else is just too high. And it felt like, oh man, that's a frustrating problem to not have interoperability across different country employment rules. Yeah, so I mean, maybe something to, if you haven't thought about that, I don't know how you
We
layer that
handle
on
all
the.
that. We built a lot of that stuff. We're not perfect, and we don't
Mhm.
support every country we'd like to, but we that's a big part of using Braintrust as a client is we abstract away all that stuff and we take care of it for you.
So facilitates all the payments,
Yeah.
yeah, in the network.
Yep.
Cool, man. Are there other parallel marketplaces you use to either write the paper on it or just learn about the economic or the
You know,
structure of
we learn. So I mean, I'm a crypto guy at heart, and so we learn from DeFi. We watch how these protocols learn. Like Robert Leshner is the founder of Compound Protocol, is a good friend and one of our early investors in Braintrust, and he's that project's a
Yeah.
year or two ahead of where we are. So I got to learn a lot about um, how to steer this thing, and DeFi is just sort of it's what we're doing. It's just in a adjacent category where they're connecting buyers and sellers around loaning money and crypto and money markets, and we're doing it around talent and clients. But they're both marketplaces at the end of the day and decentralized. So we learn a lot from them. We actually forked our governance system, our token voting system, from Compound.
Oh, interesting. Interesting. That's very helpful. Adam, where can people reach you? Are you on Twitter actively, or where can
Yeah,
people?
yeah, absolutely. I'm on Twitter, Adam Jackson SF, and then you can find Braintrust at braintrust.com.
Nice. Are you long San Francisco? Are you going to be there
Uh,
through and through?
it's funny. Like a lot of people I know are like they love to shit on San Francisco, but they're not leaving. Right?
Yeah.
so,
Oh, that's the worst.
so we have this incentive to shit on them, so we get rid of the idiots who run the city. The supervisors and
Mm,
the DA and these terrible people that need to go, so the city can come back and be better. And so but I am long San Francisco. I think the Bay Area is great. I still live here. But I'm long many other parts of the world too. Like we have so many amazing talent in Eastern Europe and Southeast Asia and South America. And, it can't just be all about the Bay Area, right? It's like this,
yeah.
like we need to eat like talent. Global talent is equally distributed. Opportunity is not. Brain Trust exists to sort of close that gap.
Yeah. No, it makes sense. It's yeah, awesome to see. I lived a couple of years in San Francisco, and I agree with you that there needs to be some significant change to the governance of that place.
Yeah.
But yeah, I really enjoyed the conversation, man, and congrats on all the progress. Any special way to get in? Is there an invite link we can share with people, or maybe we'll put that in the show notes if you
Yeah,
have one? Or
go to usebraintrust.com/hire, and
Mhm.
that is the best place to start the journey. And yeah, we'll be publicly launching this thing later this year.
Awesome. All right, my man.
Mike, great to see you. Thanks so much for having me.
Take care.